If you have moved money between your own bank accounts, received a large cash gift, helped a child with a down payment, or kept more than $10,000 in a single checking account, there are 7 specific bank account moves the IRS and federal regulators are flagging right now in 2026. Most seniors have made at least 3 of them in the past 12 months, and not one of them was told. Here is what makes this dangerous. These are not moves that look suspicious. They are moves that look careful. They look responsible. They look exactly like what a financially cautious person would do, and that is precisely why they trigger automatic federal reports, account freezes, and in the worst cases, the seizure of money you spent decades earning. My name is Laura Haynes. I am here to represent taxpayers directly in front of the Internal Revenue Service. What I am going to walk you through today is the same information I go over with clients before they make any significant financial move in retirement. There is no version of this conversation your bank will ever start with you. Move 1 is the $10,000 threshold. Under the Bank Secrecy Act of 1970, every financial institution in the United States is required to file a currency transaction report with the Financial Crimes Enforcement Network anytime a customer makes a cash transaction exceeding $10,000 in a single business day. You do not sign it, you do not see a copy, you will never be told it was filed. The report includes your full legal name, social security number, date of birth, address, and the time of the transaction down to the minute. That report sits in a federal database shared between FinCEN, the IRS Criminal Investigation Division, the DEA, the Department of Homeland Security, and approximately 400 other agencies. It stays there for 5 years. A currency transaction report by itself is not an accusation. It is routine paperwork. The CTR is not the danger. What people do next is the danger. Move 2 is structuring. Under Title 31, United States Code Section 5324, it is a federal felony to break up any transaction for the purpose of staying below the $10,000 reporting threshold. Up to 5 years in federal prison, up to $250,000 in fines, and forfeiture of the entire amount, even if every cent is legal. Consider a woman named Patricia, a 67-year-old retired postal worker from Dayton, Ohio. She sold her late husband's truck for $14,000 in cash. A neighbor told her to deposit it in 2 separate transactions to avoid the hassle. Patricia deposited $7,000 on a Monday and $7,000 the following Thursday. The bank's software flagged 2 below-threshold deposits from the same account within 7 days and filed a suspicious activity report. The IRS opened a review. The money was never seized, but that review took 4 months and required documentation going back 2 years. The fix is simple. Deposit the full amount in one transaction. Bring your documentation. Let the currency transaction report file. Move 3 is a suspicious activity report. This is the report with no floor. A bank can file a SAR on a transaction of any size. The decision is made entirely by the bank's internal compliance software, based on whether your behavior fits a pattern the algorithm flags as unusual. The bank is legally prohibited from telling you it was filed. A bank employee who tips you off has committed a federal crime carrying up to 5 years in prison. The bank faces 0 penalty for filing a SAR incorrectly. A bank that fails to file when it should have can be fined millions. That is the entire incentive structure. Right now, open your bank account and look at your last 60 to 90 days of transactions. Not the amounts, the pattern. Consistent small withdrawals, followed by one large one, multiple transfers to accounts that did not previously receive them. That is what the software is reading. Move 4 is the 15-day senior account freeze. Under elder financial protection regulations adopted across most states, a bank that suspects financial exploitation of a senior can place a hold on account disbursements for up to 15 calendar days without your consent and without a court order. The bank's software does not know why you are making a large withdrawal. During a 15-day freeze, your scheduled bills do not get paid and your debit card does not work. The solution is the same regardless of your balance. Notify your bank in writing before any large transaction. Give them the reason, the recipient, and the amount. One call to your branch manager before the transaction eliminates the flag entirely. Move 5 is the $250,000 FDIC insurance cliff. The FDIC insures deposits up to $250,000 per depositor per institution. In 2023, 3 major U.S. banks failed within approximately 10 weeks. Seniors who kept more than $250,000 at a single institution faced real exposure above that limit. The solution is to distribute balances across multiple FDIC-insured institutions, keeping each account at or below the insured threshold. Distributing savings for insurance purposes is a documented, lawful financial practice. Keep records of each account and each transfer. Move 6 is the gift that triggers a federal filing. In 2025, the annual gift tax exclusion is $19,000 per recipient per year. Above that amount, the giver is required to file IRS Form 709. If the giver breaks a larger gift into smaller transfers across multiple accounts or multiple weeks to stay below the threshold, that pattern can trigger a suspicious activity report on both accounts. A single clean transfer with a written gift letter and a copy of Form 709 filed by the giver closes the issue completely. The gift letter takes 10 minutes. The SAR review takes months. Move 7 is the joint account change. Adding a family member to your bank account as a joint owner is treated by the IRS as a partial transfer of ownership, which can trigger gift tax reporting under Form 709. It also gives that person immediate and total legal access to every dollar in the account, meaning their creditors, their divorce proceedings, and their financial judgments can reach your savings directly. Banks also flag sudden ownership changes on senior accounts as potential elder financial exploitation, which can trigger a SAR and a 15-day freeze simultaneously. A woman named Sandra, a 71-year-old retired nurse from Phoenix, added her son's name to her $38,000 savings account to simplify things after her husband died. The bank flagged the change. A SAR was filed. A 15-day freeze followed. Sandra did nothing wrong. The clean alternative is a durable financial power of attorney, reviewed by an estate attorney, which grants access without transferring ownership and without triggering a bank flag. Here is the action checklist. Step 1, confirm your current account balances today. If any single institution holds more than $250,000, plan a documented transfer to a second FDIC-insured institution. Step 2. Before any transaction above $5,000, notify your bank branch in writing, state the amount, the reason, and the recipient. Keep a copy. This protects you against both a SAR filing and a 15-day freeze. Step 3. Never break a deposit into smaller amounts to avoid the $10,000 threshold. Deposit the full amount, bring your documentation, let the currency transaction report file. Step 4. If you have gifted or plan to gift more than $19,000 to any one person in 2025, confirm that the giver files IRS Form 709 before the tax deadline. Step 5. If a family member has suggested adding their name to your bank account, stop before you sign anything. Consult a licensed estate attorney about a durable financial power of attorney instead. Step 6. Pull your last 90 days of bank transactions and review the pattern from the outside. If you see structured deposits, below threshold transfers, or sudden activity changes, bring those records to an enrolled agent or tax attorney before the bank software flags them first. You will never be told these rules when you open an account. You know them now. Share this with the woman in your life who manages her own finances and has never heard the words currency transaction report. That one conversation could save her everything she spent a lifetime building.